It's the South Carolina Good Life Podcast with your host, SC Realtors CEO Nick Kremydas.
Hello, Realtors. Welcome to episode 7 of the Good Life Podcast with me, Nick Kremydas, your CEO, and I've got a special guest with me today to talk a little bit about flood insurance. Lisa is certainly no stranger to our realtor family here in South Carolina. Lisa, welcome. Thank you for being with us today.
Thank you for having me. It's a pleasure to be here. I'd like to give your new audience, those who have not attended before, a little introduction about myself.
Sure. Tell us a little bit about your background and a little bit about what you do.
Sure. My name is Lisa Sharrard, and I own an agency called Choice Flood Insurance, and I also have a consulting business, Carolina Flood Solutions. We work with clients to help them with flood insurance premiums to make sure they're lower, that they're properly rated, as well as we have the agency that is able to offer flood insurance, difficult to place flood insurance, and the average homeowner. So we're there to provide those services to you. I'm past chair of the National Association of State Floodplain Managers, as well as on the Big Eyes Flood Insurance Task Force.
It's awesome. Thank you. You have shared your expertise with us on numerous occasions over the years, and we've come to rely on your very clear approach to dealing with some of these issues. And it's very timely that we're talking about this today. You know, we've just had the hurricane impact in the Gulf Coast. We saw yesterday, I don't know if anybody was watching any of the U.S. Open matches last night, but even in the closed roof stadiums at Arthur Ashe during the tennis tournament last night, rain was coming in through sideways and wetting spectators and even dampening the courts where they had to turn things off. And unfortunately, I read this morning a lot of flash flood events that even took several lives. So our prayers and our thoughts are with our friends and family in the Gulf Coast area, and certainly in the upper kind of northeastern corner of our country as they deal with some of these rain events. You know, we've been talking a lot over the last few months about risk rating 2.0 and what FEMA is moving toward here very shortly. We've got several deadlines that are coming up, and I thought we would talk with Lisa a little bit today to tell us exactly. You know, FEMA has told us, oh, don't worry, this won't have too much of an impact on your premiums in South Carolina, but we wanted to get a little bit deeper dive into this. And Lisa, what can you tell us? What's the difference? What are we going to see in the main difference between risk rating 1.0, or the old system, versus the new system that's coming online soon?
That's a great question. And what we're going to be seeing is FEMA's looking at different factors. They're looking at the age of the house. When was it built? Is it an older house? And the older homes were built smaller houses. They, around 800 square feet to 1,000 square feet, 1,200 square feet. But the newer homes are 3,000 or 4,000 square feet. So there was no equity. In risk rating 1.0, they were charged the same rate, whether they were 1,200 square feet or 3,000 square feet. They paid the same rate. And it basically looked at the base flood elevation and the flood zone and, the foundation type. Those were the primary factors that went into the insurance rating. But with risk rating 2.0, they're looking at other factors. The flood zone will no longer be a factor, and the base flood elevation will no longer be a factor. So those two key elements from risk rating 1.0 are not going to be part of risk rating 2.0. And because of that, there's going to be no preferred risk policy, because preferred risk policy was structures that were issued for structures based in zone X. And so since the zone is not a factor anymore, FEMA has a one standard policy for residential structures and commercial structures that will be a standard flood insurance policy across the board. They're going to be looking at the distance to water that the structure is, the risk to that structure, the type of foundation, the square footage, and the replacement costs. Before, replacement costs only was considered in V-zone structures. Now those structures are going to be, the full replacement cost will be calculated for single family homes The agent will have to provide it for commercial and condos, but FEMA will calculate it for single family. So no longer will the agent be providing that replacement cost value. And we've seen some policies where the homeowner's policy was $575,000, but when it came to the flood policy, the agent would put the value was $250,000, because that was the max they could buy. And so insurance to value is a key factor in the new rating system.
Is there a new maximum level under 2.0?
No, there's not. It's still going to be the 250. But for example, I quoted a commercial structure. We estimated when we did the quote to be $500,000. When we got the replacement cost value, it turned out to be $680,000. It changed the premium by $400. Even though they couldn't buy any more than $500,000 worth of insurance, that higher replacement cost value changed the premium by $400. So it does have an impact.
So we've been waiting for the last few months to see some actual numbers when it comes to some of the rate policies. What have you found so far? Have you seen FEMA release these numbers yet? FEMA released the companies made the system live to us last Friday. So the last Friday was the first day we could actually do some quoting. And so between Friday and today, we've been, doing a lot of quotes, particularly for Horry County, because Horry County is changing flood maps in December. And so if they don't have a loan closing coming up, the last day we could write a PRP policy would have been August 31st. And so we've been, fiercely, running the numbers between risk rating 1.0 and risk rating 2.0 to see what the difference is. And the difference is, for PRP structures is significant. It's the $300 or $400, sometimes $700 difference between a regular flood insurance policy, and the preferred risk policy that we're able to write up until the 31st for new business. Now, if you have a loan closing between in the month of September, they could still get a preferred risk policy. But if you're going from an Zone X to AE in December and you don't buy your policy, if you buy your policy after October 1, you will be rated under the new system and rated with using the data available at that time. They're not taking into account flood zone, but they are taking into account the distance to water. So what we're finding is the current policy for a grandfathered structure that I had in the coastal, I ran the numbers this morning for a coastal VE property that was grandfathered, and grandfathering will not be available under risk rating 2.0. They're currently paying $474, and they'll continue to pay that. It'll annually increase anywhere between 15 to 18%. They'll be able to keep that rate. But if I had to quote that policy today as is, it would be $2,894. Wow, almost 7 times more.
Exactly. But again, it looks at the risk. This is an oceanfront house in a V zone, and it's almost 4,000 square feet.
So realtors that are currently under contract or have pendings in the month of September, repeat the advice you just gave.
If they have a loan closing in September, and if the homeowner, or you can figure out if they're going from an X zone to an AE zone by looking at the maps for Horry County, they should buy a preferred risk policy today. If they're one of this, and it's about 7,200 structures that are going to be impacted by that move. And the reason why I say buy the preferred risk policy is if you're, I just bought one for another property for my daughter. It was about $650. If we had to rate that policy today, it would not be $650, probably be $950 or $1,000. So again, it goes, they'll get eased into that higher rate because of the caps, the annual cap of 15 to 18% that they can raise. So if they buy that policy today, they're going to be able to save money long term. Instead of having to pay, $1,000, they'll only pay, maybe $6 or $7.
That's significant. FEMA, I think in their state by state analysis, Lisa, I think they said that South Carolina would see an average increase of about $10, was the statement they released. But what we're going to see is exactly what you said. Properties that are closer to the water, larger homes, are going to see a larger disparity in those rate increases, whereas homes further away from the water may actually see some decrease to offset and get to that $10 average that they originally quoted.
And we'll be able to, any agent now can utilize the policy number of if the seller has a current flood insurance policy.
When you say agent, you mean insurance agent, right?
Yes, any insurance agent can utilize a current flood insurance policy to transfer that rate to a buyer. So we can assign policies and change agents at the same time, so they don't have to stick with the same insurance agent if they choose not to.
So if realtors wanted to compare a home or a commercial structure to see what rates will be before and after, this website that FEMA's released, they don't have access to it. They've got to go through their local insurance agent, right?
Right. Right now, only insurance agents are going to be able to provide the quotes, and that's the way it should be.
How many insurance agents are going to be up to speed on this?
It's going to be a challenge because the insurance agents who currently have flood insurance in their book are going to have to go back in and touch every single policy in their book to add additional information, or the policies will be non-renewed by FEMA.
Wow. How does the homeowner get notified, or are they being notified at all about this by FEMA or by their insurance agents? Do you know?
One of the things about again, it's October 1 for new business, and in April 1st, it'll start affecting April 1st of next year, 2022. It will start affecting the renewals. So it's not going to be all at one time. So between December 1 and April 1 of 2020, October 1 and April 1 of 2022, we're just going to be dealing with new business. But beginning April 1 and the policies that renew after that, we will be looking at renewals moving into the new system. And so one of the things you're going to see on the deck page that I'm going to share with you is that it'll show you what your true risk rate, full risk rate is going to be. So the policy I said that they were paying $474, they're eventually going to be paying $28.94. So, and it'll show you what that full risk rate is. So it's going to take them a long time to get there, but they will be there eventually.
So that let me ask you a question. So I'm just because some of this gets me confused. So the home you're just talking about is property in Horry County.
It's coastal, yes.
It's coastal. So if they're not basing the rates on the flood maps, how does Horry County's changing or updating their flood maps in December going to affect the premiums?
That's a very good question. It doesn't. The only thing that affects is that the preferred risk policy is no longer available.
Gotcha.
Beginning October 1. So if they have a loan closing in the month of September, or if they had purchased a preferred risk policy, if they're in Zone X, they can qualify for that preferred risk policy, and they will be eased into, like the old newly mapped procedure that FEMA's eliminated with this as well. They'll be eased into having to buy flood insurance. And so Horry County will be the first county that we really face in South Carolina that will not have that newly mapped procedure available to them. So we've really been trying to educate, Horry County about, buying flood insurance before the maps, before October 1, if they have a loan closing, or if buying it by August 31st with a 30-day wait.
Yeah. So for all our realtors listening, we've been talking about the additional costs of housing over the last few months. The new construction costs, materials, labor, all the shortages that we've been facing. Inflation is real. Inflation is here, and these policy changes at FEMA are just going to continue to add to those costs of home ownership, particularly in our coastal counties.
And I do have some good news, is that the older homes, the preferred preferred risk, those homes that were built prior to the initial flood insurance rate map, we are seeing those numbers go down.
Oh, good.
Okay, so we're seeing those numbers go down. Some of them by $1,000 or more. So that's very beneficial. One of the things that an elevation certificate is no longer going to be required to rate a policy. So that expense has been eliminated. The elevation certificate, if you have one or you can get one, it doesn't matter how old it is, we can still use it. But that elevation certificate may provide some additional savings for them. If they have flood vents, that may provide some additional savings. And flood vents mean, vents that are within 1 foot above grade.
And I know you've got some if I remember correctly, Lisa, you've got information on some of these mitigation things on your website, right?
Yes.
I'll make sure that our producer, Mike, will include your company website link in our show notes. And Mike, please make sure we include FEMA's flood insurance website as well. What other highlights have you been able to take away since you've gotten access to this data, Lisa?
Condos. So if the condo building was in the flood hazard area, the lender is going to require flood insurance. And they could be on the 10th floor and not be subject to flooding, but they had to pay the same as if they were on the ground floor. Wow. And so today, under Risk Rating 2.0, condos are finally going to be recognized for being on the 10th floor, and therefore they will have a reduced rate because of that. So that's a big win. And condos are a big deal in coastal South Carolina.
That is tremendous news. We've had condos in the news as a result of some of the problems they had down in Florida, but this is good news on the insurance front. Thank you.
And the other thing is commercial rates. Commercial rates I'm seeing coming down. So if you have pre-firm subsidized, commercial rate, those rates are coming down in some of the, quotes that we've done. So that's a big win. But I think the two classes that we're seeing come down is the commercial and the preferred, the pre-firm subsidized. Those two classes we're seeing coming down. Some of the V-zone policies I've heard are coming down, and then some are going up. It just depends again on that replacement cost value, and that's becoming a big factor. The great news I have is let's talk about repetitive loss structures.
Okay.
These are the structures where you had 4 or more claims, and there's all these surcharges that are added to it, and they're stuck with the NFIP direct. And I have one client who's paying over $12,000 for his flood insurance, and he keeps going up 25% a year. Well, under Risk Rating 2.0, FEMA's going to wipe that slate clean. They're going to re-rate the structure. You'll still have the surcharges, but they're going to wipe that slate clean until you make your next claim. And then when you make your next claim, they're going to go back in and they're going to look at all the prior claims history, wrap it all into one, but they're only going to be looking at the last 20 years. And that's a big win for South Carolina, because if you remember, a lot of our claims came from Hugo.
Right.
And that'll completely knock out those, claims from Hugo.
Well, and for those homeowners that have added mitigating elements to their home to protect their home, that could be a big savings for them. And those that have not done any of those things, well, they need to be prepared to pay even higher premiums in the future, sounds like.
And it's gonna happen. They'll go back and they'll go back. They're gonna wipe out till you make your next claim, kind of level out that playing field. And, because that's the only way they're going to bring these rates down below their cap of $12,365.
Wow.
So, and that'll be the maximum premium anybody would pay.
So if we're speaking mainly to an audience of realtors here, and we've got our membership now, Lisa, we're at 27,000 realtors statewide, the highest membership has ever been. What would be your advice to realtors today, right now, and how can they be proactive on this with their clients and customers? with these changes that are coming up.
Yeah, they really need to develop a relationship with an insurance agent who can help them decide whether to buy a policy now before they, when they go to list the house, or it doesn't matter whether they buy it now or later. But again, houses always sell better with a known factor, how much that flood insurance premium is going to be. So if they don't have policies, buy them now. If they currently have a policy under risk rating 2.0 between December and April, I think FEMA is going to let the agents make some adjustments to give them that rate if it's going to be lower. So I think FEMA is going to allow us to do some refunds. So as we go through and touch this book, if we find out you would benefit from risk rating 2.0, then I think we'll be able to do some refunds to those insureds. Awesome. But again, find out, knowledge is power. And if you've got to, when you're trying to sell something, the buyers want to know how much, what's the cost, what's the true cost going to be for me? And having a policy in place, you can say, this is the policy versus this is a quote. A policy is a known entity. A quote's still got to be reviewed by an underwriter. And so by giving them a firm policy that this is the policy for this house, this policy is transferable to you. And the only policies that aren't are USAA policies. And so, but we want to be able to move forward. We can still transfer the discounts that they've been getting or grandfathering they've been getting. Any agent can do that now. We just need the policy numbers. But again, that is absolutely critical for people to, real estate agents, is to work with their sellers to make sure that they have policies in place or, knowledge, providing that information to a prospective buyer because they're going to ask.
Got it. Well, thank you. Any other risk rating 2.0 items you want to bring up today? I think we've covered some of the highlights.
We have, and it's going to be, we're all working through this. It's going to be a lot easier for insurance agents to quote flood insurance, but it's also going to be a little bit more timely in the beginning until everybody gets used to it. Any
chance that Congress dips their toe back into this and either tries to delay it or modify it? Have you heard anything from any of the national groups you belong to?
I have not, but I'm sure as things get more available, the information gets out there more available, I think that Congress will be make their opinions known one way or another.
Our lobbying team has told us at NAR that Congress can't agree on what color the sky is right now. With all the divisiveness. So they tell us it's unlikely we'll see any immediate changes. But I think you're right. I think once some of these premiums kind of get out there and the good and the bad, Congress usually reacts to the bad news. And so we'll see what kind of impact that has going forward. But realtors, it is important. Lisa said it, I think, absolutely the best. Knowledge is power. And it gives you the edge you need in this competitive market to be a leader in your community, to be a leader in your company. So I would ask you to, we're going to post this, of course, on all of our sites and stuff, but share this with the other realtors in your company. Share this with other realtors in your local association. This is going to be critical over the next few weeks. You can make some clients extremely, extremely happy and build even better relationships going forward into the future. Because they'll remember the realtor that helped save them money, but they'll also remember the realtor that maybe didn't point something out where they could have saved some money. So please stay on top of this. And Lisa, thank you so much for your expertise. And tell us the name of your company and where can folks find you one more time?
Choice Flood Insurance, and we're in Columbia, South Carolina. And our website is www.simplyflood.com. Our telephone number is 803-865-4297. And they can reach me at lisa@simplyflood.com.
Realtors, before we go, just want to remind you again of the importance of staying up to date on topics that are relevant and timely to your industry. The best way that you can do that is to is to subscribe, follow us on our Good Life podcast. Make sure you're following us on our Facebook page as well. And I know all of you get our weekly email newsletters. And if you've accidentally opted out, we can get you back in. No problems. So in the meantime, until our next episode, Realtors, stay safe, stay Realtor strong, and we'll catch up again real soon. Thank you. Thank you, Lisa.
Thank you.
For past and future episodes, check out the Good Life podcast at goodlife.screaltors.org. Thanks for tuning in.